lenders have in their mortgage clause that you're not allowed to have any secondary financing, right?
Mm-hmm.
But long and behold, people get into situations and they need funds, and the only accessible way to do it is through a private second mortgage, right?
Mm-hmm.
I mean, why is it from a legal standpoint that all these lenders put that there, knowing that they can't really enforce it? And again, I know you're a lawyer, so you got to answer me on a certain way, but again, we're just trying to have candid conversation to kind of educate people and, however you see fit to
Well, okay,
dissect that.
there's a couple of dynamics at play.
Yeah.
Number one, banks really don't want you losing your house because banks don't make money
Hmm.
calling in mortgages.
Yeah.
I mean, even with the penalty, banks make money by lending money out and having it
Yeah.
loaned out.
Correct.
So for you to get into financial trouble and then get over leveraged with a second mortgage means that when both come due and have to do refinancing, A, there's a higher statistical likelihood you won't renew with the bank, you'll go somewhere else. They want to curb
Yeah.
that. Two, you taking a second mortgage is the first sign of trouble in your finances. And so they want to nip that in the bud as early as possible because this is a sinking boat. And as soon as that trouble starts, you gotta plug the hole and fix it, because you have clients who refinance once a year because they come back and their visa's back at 20 grand. See you next year. Their visa's at 20 grand, and their mortgage gets higher and higher and higher until they have to sell. That's
Yeah.
ultimately a bad investment for the bank. So they put it as a term of the contract, and they kind of rely on you not to borrow the money.
Yep.
Number two, if they find out that you breach that term, it gives them grounds to call the mortgage. And if they call the mortgage and you don't pay, they can power sale the property. Because as the borrower's ship goes down, they want to have that parachute to get out of the transaction early.
Yeah.
Because in extreme cases, when people finally realize that they're on the Titanic, they will take the house with them. They'll cancel the insurance. They'll take on renters. They'll just absolutely destroy the property. They stop repairing the property because they know it's only a matter of time before they lose the house. And a homeowner that doesn't care for the house devalues the house and puts the bank's security at risk.
Yeah.
And so, the first thing a bank will do from a mortgage enforcement point of view, if they find out that you have secondary financing you weren't supposed to have, is they'll find out, well, how much do you owe them? What is the new loan-to-value ratio?
Versus, the value.
And if it is a legitimate, look, I ran into a personal circumstance, I lost one job, I knew without solid employment you wouldn't lend me more money, so I had to do this.
Yeah.
But my loan to ratios are still good. I have a new job. I'm paying all my bills. I'm going to wrap it all up. They're like, okay, fine. Water under the bridge. Just don't ever do that again. And then they'll move you into a collateral mortgage where they've registered so much
that you can't access anything.
You can't access second mortgage anyway.
Yeah.
That's why banks have aggressively done that. Now, all the Schedule A banks have moved to collateral mortgage. And for anyone who's listening who doesn't understand what the implications of that is, let's say you own a $600,000 house, you're taking out a $300,000 mortgage. They register it at $600,000, even though they've only loaned you
$300,000.
So if I am a private lender and you come to me for a private mortgage, I do a title search and I say, oh, well, there's no equity.
Yeah.
Well, sure there is. I only owe $3. Yep, it's registered for $6.
Yeah.
So I have no claim. So
they hold your equity for hostage, in other words.
Yeah.
Yes.
But having said that, here's the funny legal thing about that. Okay.
Yeah.
Let's say I'm going to just make up this scenario. Wes Jackson owes Royal Bank $300,000. Collateral mortgage registered for $6. I go to Andre, and Andre Dawkins himself gives me a private mortgage for $50,000. Well, legally, that $50,000 is a second mortgage behind the $3. And if Royal Bank loans me more money, that new loan is behind the $50,000. So even though it's registered at first, RBC now has a first and a third mortgage, legally speaking, especially if they know about the second mortgage.
Yeah.
Now, where they don't know about it, they can go to court and they can convince a judge for a court order. But now you're adding legal fees, you're adding delay and uncertainty, and banks do not like delay or uncertainty. So you get into these crazy scenarios. We had to fix one earlier this year. Fortunately, everything was on the up and up. It was the second mortgage was specifically for construction, the first mortgage knew about. They consented to it. Everything was fine. And it was because between us and the broker doing everything on the up and up, being honest with everybody, everyone knew the deal was, we were able to get it done with some extra paperwork.
Absolutely. And that's usually the best way, is to present things as what it is, right? A lot of times I find borrowers, you know, they say buyers are liars is like, you know, a quote unquote. But the thing is, people do some reason feel the need to not say everything, and they think that they're doing themselves justice. But then eventually it comes out, and then it makes it worse. It either will stop what's happening, or, you know, it will derail what's to come from occurring then, and make it be a lagged on experience, right? When you can just be forthcoming with the information and let us know, so that, you know, as professionals, we can approach it in the right manner from the start, right? As they say, nip it in the butt.
Yeah, I don't know
right?
how to get you the best mortgage rate, but I know how to get the worst mortgage rate. And
Yeah.
that is apply to replace a mortgage that got pulled 2 days before closing. Guaranteed worst mortgage rate on the planet. 100% every time.